I've got your December numbers for real estate here in Waterloo Region, and one word sums up our marketplace: slow. I'm going to get you all the details on that story starting right now. This is KW Real Estate News and Views for the week of December 29th, 2025. We've closed out the year. It's been nothing but slow from January right through. Pretty much every video I've done, blog post I've done, I've said the exact same thing. It's been a slow market. Starting off with our most popular segment, detached properties. It's the bulk of the market. Most people want to buy and sell those. Looking at prices, we came in at December, $840,000. That's actually up 2% compared to November. But if you look at it on a year-over-year basis, we're actually down a full 6%. The story worsens as I go through the other segments, and I think this ties into the investment community. I'll go into that in a little bit of detail in a bit. Taking a look at semis. Semis are just over $601,000. I can remember more than a few times this year I've mentioned them being $620, $630, $640. And they haven't come down a huge amount. Year-over-year basis, we're down 7%. We're down 6% month over month. So December definitely not a good month for semis relative to November. Talking about townhouses next. Townhouses is kind of a two-part market. You've got freehold townhouses and you've got condo townhouses. There's a big gap in price between the two, give or take $100,000 higher for freehold versus condo. They've come down substantially, the entire segment. We're sitting right now at $567,000. That's 3 times this year where that's broken under 600. They normally sit roughly where semis sit in the low to mid sixes. So this is a big reduction for townhouses, and I'm guessing probably the condominium portion of that is what's dragging it down. We're down a full 10% year over year, and we're down 5% on the month. So again, another slow month with price reductions in every segment. As I said, the only one month over month unaffected to the downside was detached properties. Now moving on to the final segment. Apartment style condos. This reads exactly like the Toronto condo market, and I do think it's for the exact same reasons. We've got way too much inventory, not enough buyers. Different scenarios as to why. I think ours is student driven, and we've built an awful lot of beds in Waterloo for students who are no longer coming. Anyways, that segment, apartment style condos, hammered. We're down 22% on the year, and we're down 14% month over month, sitting right now at $369 grand. I can remember them being well north of $500,000 just a few years ago. So this is a big hit. And again, what I think is driving these numbers, aside from detached properties, is the investment community. No investor is going to go spend almost $1 million on a detached property to rent it out. It doesn't work that way. It's not a smart way to use your money. You can buy cheaper things like semis, townhouses, and apartment style condos. And these are where we're seeing our biggest price reductions. And I think what it is investors are leaving that space because they can put money in the TSX or in the States in their market and get way better returns than what you're getting in housing right now. And I think that's what's driving our market to the downside, especially when you look at inventory levels. So talking about the 10-year moving average for inventories, we're double where we normally are. We're at 198% above the 10-year average. So, that's 98% above 100%. And that's a huge number. That in combination with the fact our sales volume is 18% below the 10-year moving average, that extra choice that buyers are faced with puts downward pressure on prices. And I think going into January and February, if we don't see a turnaround, especially in apartment style condos, I would be calling this a correction, a proper correction, especially in that, that end of where investors buy. If you're a buyer, definitely opportunity. This is where people want to take advantage of a down market. But that's where we're at. This is nothing that I haven't been talking about for the past year. It's just we're seeing a trend now that would indicate that we're actually in a correction. I think there's no question about that right now. When will it turn around? That's the $1 million question. I don't have a crystal ball. One thing that's going on, though, is we don't have the amount of properties being built that we need. Provincially, we're well below the targets that the province set a couple of years ago for I think it's a Build Faster fund they were talking about doing. We're well behind where we need to be. And interest rates, they've held them flat at the last meeting. They're unchanged. But we're in a relatively low interest rate environment. And if we don't have enough housing stock, it is possible in the spring the market will turn around. It's a fairly safe bet that it would, but again, to what degree, I don't know. At the moment, though, certainly slow year, slow December, no question about it. And that's just how things are at the moment. Anyways, that's all I got for you on this story. Thanks so much for watching, and we're going to catch you on the next one.